Hey, welcome back to Everything Money. We're glad you joined us again. It's Seth and Paul. I almost forgot my own name, Paul, but welcome into the show. Thanks for watching. If you've clicked this video, you're probably interested in investing. If you're new to investing, it's a scary road out there, Paul. We have a lot of people in our community that they finally get turned on enough to investing to join our community and start slowly inching toward like overcoming the fear of putting your money somewhere. If you have a 401k through work, if you have a Roth IRA and have been somewhat hesitant in what to do, we do a lot of videos, Paul, on stocks. And there's a lot of, there's almost damn near fights on YouTube drama about particular companies. But in the end, we're both just putting most people should be putting a small amount of their overall long-term savings into stocks that carry much more risk than a bond or something. But in general, you've coached everyone you've always met, basically, is like, put it in a low-cost ETF. So for our new viewers,
why is that?
Tell them,
guys. You're gonna try to beat the market. It's not gonna work because you're probably not gonna do what it takes to actually beat the market emotionally. So if you buy an ETF that has a low cost, less than 0.1%, you're basically gonna match the market and beat all these professionals. Because 82% of mutual funds, actively managed mutual funds on a yearly basis, do not beat the market. So extrapolate that out to a 10-year period.
When you say beat the market, what does that mean again?
Beat the S&P. So invest in the S&P. Pick your bank, and then just invest in the S&P 500 ETF. A lot of companies, Vanguard, Spider, all these ones have this. So go figure it out. Low cost, Schwab has one. I don't get why people are trying to, I get it, it's fun. I'm not telling you to stop learning how to invest and invest in stocks, but put the majority of your money into an ETF. You're gonna beat everybody over long periods of time. The hard part for you is gonna be when the market is soaring and all your friends are making tons of money on idiot stocks.
Yes.
Then you're gonna sit there and go, well, man, our market was only up 24%. My friend was up 38%. Okay, that's the hard part about investing. But your job is to dollar cost average. The market does this. So let's look at the market here overall. Let me actually pull up a blank screen here so you can see. Over long periods of time, this is a stock market.
Mm-hmm.
Right?
Another channel I was watching said this is a guy with a yo-yo walking up a hill.
Oh.
Up and down, and down. Or we call it in the past Mr. Market and what his thoughts are on a daily basis.
Right. Mr. Market's telling you this is overpriced, this is underpriced. If you invest all along the way, guess what's going to happen? Sometimes you're going to invest when it's overpriced, sometimes you're going to invest when it's underpriced, but overall you're going to invest exactly along this line. But if you start guessing, here's what 99.9% of you are going to do, and you're going to tell me I'm not that person. You are that person. I'm that person. You're going to go, I'm a genius. Oh my God, I'm stupid. I'm going to sell everything. Okay, the market's getting better. Okay, I'm going to get back in. Oh my God, I'm going to sell. You're going to be selling at the wrong times, but you're going to be selling at the wrong times and buying at the wrong times. That's why you're not going to beat the market. But if you just go on auto drive, invest in an ETF over and over again, month in, month out, guess what happens? You end up being worth a lot of money.
Yeah.
And that's it.
So I'll go back, Paul. One of the stocks that we've purchased in the past 6 months, which is very rare of all our videos, is Alibaba.
Yeah.
And I followed your lead and the lead of some of the people I also really admire, Manesh Pabrai, Charlie Munger, and finally said, if, like you said, if the people I admire think this is a good buy, I may as well. I
never said that.
Well, no, I'm sorry.
What I've said is, if Charlie Munger believes that the numbers are legit coming out of China, right, I can believe that. I'm still going to do my own analysis because my biggest concern about Alibaba was, are the numbers legit?
Yeah.
Can I trust the China? Can I trust the Chinese numbers? Okay. And guess what? Munger can? Fine. But I still do my own valuation.
So going back, I bought Alibaba at around 200. And I maybe misheard you at some point saying, hey, can I just put a stop on this? If it crashes, can I save myself some money? So
I sarcastically said, you can do that.
Yeah. So
and then you went, stop. And I was
I put a stop on Alibaba. And at one point when it fell, I lost the shares. And you sort of looked at me dead in the eye, like, if you can't understand that you want to buy a stock today and then have it go down, you should not be in this stock. And sure enough, a friend of ours, mutual friend, texted me yesterday. This is the text. I lost $1,000 on Baba. Still like it? And I said, so here's my response. Let me know your thoughts. We set at 200. We wanted it to fall. This is a very long-term play. Paul looked at me dead in the face when I bought BABA and said, if you can't understand that the second I buy this, I want the price to go down, you shouldn't even be buying stocks. Just
individual stocks.
Just stick to ETFs. I said, remember, there's no way we caught the bottom. And yes, I bought more shares last week for my sons. But I mean, the idea that like,
and this is why we stopped sharing what stocks we buy on a monthly basis to the people who buy our software.
Yeah, Paul, I don't mean to interrupt you, but for example, my son said the same thing. Gio was interested in Alibaba. He worships the ground you walk on, and he bought some. He said, Dad, Alibaba went down. See, I told you. And I'm thinking to myself, I looked him dead in the face, just like this. I said, like, you have to this is a concept that's hard to grasp, is when you're buying Alibaba, you want as a value investor, you want this to go down, because if I loved it at one price.
And the fundamentals have stayed the same, but Mr. Market and people's emotions drive the price down, but the fundamentals are still the same. Why would you do anything? Well, that's exactly why when you have a company that's privately held, you never know what the company's worth on a day-to-day basis. All you care about is, how do I drive cash flow higher? That's it.
Yeah.
And if you drive earnings and cash flow higher over a long period of time, what's going to happen to the value of the company? You're telling me today that if I had a company that made $1 billion a year today, and 10 years from now it makes $10 billion a year, that it won't be worth more intrinsic value 10 years from now than today? Now, the market might determine, like, look at Intel. Intel in 2000 was $75 a share and had a market cap up here. The market cap is now down here, even though revenue and profit have tripled. Why is that? Well, because it was way too overpriced here. Intrinsic value was down here. Intrinsic value went from here to here, but the market price went from here to here.
Yeah.
There's a big difference between price and value. So I tell everyone, if your concern is, oh my God, the stock went down, pump the brakes, keep watching our videos. It takes years to get around this.
Years, yes. This isn't like you're going to do this next week.
Think about your favorite thing in the world to buy. What you're telling me now is you prefer that thing to go up in price, so you have to pay more than down in price so you can buy. I don't care what it is. If your favorite thing to buy is sneakers, do you want sneakers to go up in price or down in price? If you tell me up in price, then I have a ton of stuff to sell to you because I would love to charge you more money.
I don't think you've ever said it quite this way, Paul. You're right. I mean, if all...
Well, Warren Buffett's analogy is when hamburgers are on sale, the Buffett family is very happy.
Yeah, I mean, like if all your Rolexes were suddenly worth $10 a piece...
I would buy a lot more Rolexes.
And same thing for my stupid Magic cards. I would be buying a lot more because regardless of the price, I still love them. I've always have, even when they were worthless.
So it's funny. Mo and I were in Florida this past weekend. We go to a bunch of watch stores. And this kid behind the counter, he's been there for a year.
Go on.
I go, hey, I want this watch. He goes, oh yeah. He's like, it's going for this price now. I go, oh man. He goes, yeah, but they just keep going up in price. Like, I don't see this ever ending. And I laughed and I was like, well, the kid behind the counter says it's never going to end, so it can't ever end, right? But I looked at it going, I don't want to buy this watch right now. Why? Because the market has skyrocketed last year. It's a lack of supply. Eventually, the supply will go down either through demand. Either supply will go up or the demand will decrease for some reason. Because supply and demand cannot be at the same levels of growth or decline forever. It just can't happen. So I'm just programmed to say, oh, this thing has gone up a lot. I just programmed myself over a 20 plus year period. I've been investing since I was 13, 14 years old, so 27 years. I programmed myself to say, wait a second, if this thing is going up a lot, it probably means that people are overhyping it. I want to stay away.
Yeah.
Does that mean I'm going to miss out? Absolutely. But I have zero FOMO. Zero FOMO. With ETF investing, it's just about sticking right to your guns, saying every single month I'm going to buy this and I don't care where it goes because I have my outlook. If I'm 30 and I'm 25 and I'm going to retire at 70, that's 45 years of not giving enough. And I'm just going to buy month in and month out for 45 years and you're going to be extremely, extremely wealthy. You're going to have more than you need. So why try to hit a home run with all these companies that make 0 sense?
Yeah, and like I said before, trying to answer to maybe your parents or your spouse about why you
divorce your spouse,
why you
Menendez your parents,
threw thousands of dollars at AMC or some other meme stock.
Don't Menendez me. That's from 30 Rock.
It's just a more simple road, Paul, of stability.
But that's the thing. It's a more simple road that's led to a lot of wealth.
Yeah,
it's led to a lot of wealth. And the other thing is the fees you're going to be charged by having a financial planner aren't worth it. Are not worth it. Now, if you need somebody to be warm and fuzzy and hold you when the market's down, come to this channel.
Yeah, Paul
just
do
subscribe.
that.
I'll hold you. I'll hold you. Just subscribe to our software and I'll give you a virtual hug. Come on. I mean, financial planners just going to, listen, I have great friends who are financial planners because they need people, the people want to be guided. Great. But if you this is the world of the internet now. Like you can get a lot of information without without having to worry about a lot of things.
There are other ETFs, Vanguard. Let us know in the comments.
Schwab.
If you have other ones that you would love. In essence, we always coach SPY, and that's where I have a lot of my money too, Paul. So,
all right.
That's our take. Final thumbs up. Join the Everything Money community down below, everythingmoney.com, and we will welcome you. If you want to keep this conversation going and watch more of our videos, it's going to take some time. It's taken me 3 years to get to this point. I still know Jack nothing.
Jack nothing.
See you. Thanks for watching.